Hey, welcome to the channel. I've been scanning stocks for a very long time, but I'd never thought about live streaming, so I just wanted to show the whole process here. Anyway, I think you can see the screen, charts. Anyway, so when you're scanning in the stock market, you want to start out on the highest level. So you always want to know where the market is, right? So here I have my daily chart, and here I have my weekly chart. I use the white chart just, to kind of illustrate and show people, but when I'm doing my own work, I use the dark chart. So that's where most of my stuff is. I will remove these lot lines for now just to, make it easier for us. Anyway, you start out by reading the markets, and then you just want to see where all of the indices are. So currently we can see that the indices have just crossed over the 20-day simple moving averages. So here on my chart, the light blue line is the 20-day, and the white line is the 50-day simple moving averages. And on the weekly chart, I do have an orange line. I keep the moving averages very light because I want to keep my focus on the price bars, not on anything else. That's why I try to keep everything else as faint as possible. Anyway, let's go through the market. So what you like to see is whenever the market just crosses over the 20-day moving average in either direction, it's always a good time, to start new positions. As soon as it crosses up, it looks like a very small move. This is just, a 3% move. Once it crossed down, this was just a 9% move, but the fact is that so many stocks will swing way farther than the market. That's what we call a beta. So like if you look at Appfolio, while the market fell down 10%, this one went down 50%. So in the same way, if the market is swinging up just 3%, this one swung up 54%. So whenever it's crossing over, that's what we like to see, and that's when it's good to initiate new positions. And that's why I'm doing this stream today, because this is a good time to start new positions. So what are we seeing on the weekly chart? The 10-week simple moving average is sloping down, and then it looks like it's going to make a negative crossover. So this means that the market is most likely, I think, going to stay in correction territory. That is my guess. It's going to be here for a while. So what I'm thinking is going to happen is that the market is going to recover and then fail, around here, and then it's going to continue crashing. But while it recovers a little bit, you can swing trade stocks up, and get a very quick profit, or you can just sit out and wait and see how the market might move. It might also just continue going up. We're not so sure, and that's why you always need to keep your eyes on the market. But right now, I know it's a very good time, just at least for the next week. I think it's going to be going up. Then after that, we shall see. Is it going to correct a little bit and then continue moving higher, or is it going to stop and reverse? It really doesn't matter, because once you get a very short swing trade, you can just exit very quickly and then see where the market is going next. So if we go back and look at these EMA crossovers, right? So whenever it crosses over here, look at the weekly chart, it always tries to recover, it collapses. But here it did recover fine, but that's also because we're coming from a bear market. Most of the time, this is what happens, right? This is what I'm expecting to happen, because we've come so far down below. So what I'm expecting is that the market is around here. So it's going to come, try to recover for a week, and I think it's just going to continue crashing. But of course, that being said, I'm not entirely sure of the future. If I was very sure of the future, then I would just make crazy bets. But since I'm not sure, then I have to make very calculated bets. So right now, I wouldn't be entirely going long. I wouldn't be going short. So that's the S&P. NASDAQ is doing the same thing. And then I look at the Dow Jones, it's very good. I want to keep my alert lines here. I'm going to add alert lines here so that next tomorrow, if it moves around, tomorrow, if it, moves above that high, then I know, okay, continue swing trading stocks up. So first job is to, come on, I'm trying to get these alert lines back, but it is just refusing to do it. Okay, they're back. Russell 2000, it has been crashing way much more than the others, right? So you see it's way below the 30-week simple moving average. I think it's going to recover and then crash, just like we saw here in the past, right? Falls down, it's going to recover, continue crashing. That's what we see on the weekly charts. So let's just enjoy this few weeks when the market might be recovering, and then I think it might continue to crash. Then I also like to look at the RSP and the QQEW. So these are more like equal weighted indices, and they tell you what is really happening. Because S&P 500, Nasdaq, they're driven by the, by the bigger names. But if you look at these equally weighted indices where every stock, participates equally, then you can really know what is going on, right? So very similar, signal in all of them. QQQ equal weighted, showing if you see a green bar, it means the volume was really good. So this is a good sign. I'm going to swing trade it up, and then I'm going to wait and see what's going to happen. I look at the Argentina stock market. It's looking strong. I always look at the whole world just a little bit, I like the Canada one because it has, it rhymes with the USA one and it gives clearer moves. So this one is not showing a very bearish signal. We're seeing something called a check out here. So it comes, checks out, and recovers. So that's a very strong bullish signal. So right now, I wouldn't say I know where the markets are going, but at least I can be sure that it is going to bounce. Okay, now after that, I go look at the biggest cryptos. Bitcoin. Let's see what's happening. Yep. So for this, when you're looking at the weekly chart and you want to know if it's ready to go, one thing you should know is that things rarely cross over a falling 50-day moving average. So when you see this white line falling, just know what is most likely to happen is that it's going to try to, if it's to succeed to go through, then it's going to come back and test it, right? So you don't have to rush, because when people see it moving like this, they're like, oh, I gotta get in. But a lot of people lose money over here, so it's better to just wait. So right now for Bitcoin, I am just waiting for it to recover over the 50-day and then try to retest it. Same thing of what's happening here. You see the 50-day is falling. So whenever the price, if you got in here, you'd have been stopped out. So we don't know when it is, but the safest time is when it passes through, comes back and tests. So you see this was actually the best time to buy, 62,000. And then you'd have gotten in for a clean move till 70%. So that's the same thing we're going to wait for here. Of course, you could get in earlier, but the risk is not worth it. Look at XRP, kind of showing a good signal too. So when I'm looking in a base, I'm looking for a few things. I'm looking for double bottoms. I'm looking for checkouts. I'm looking for chits. Just basically all of those things. This one looks like it might be forming a head and shoulders pattern. So we're not so sure. If it comes and collapses down, it's game over. But if it continues going up, that'll be nice. These ones are in their bearish state. Not looking so good. Look at my crypto stocks. This is a very good sign. I bought some here today. I can show you. I already have, so here are some failed trades. Then this is the one which is currently profitable. So I entered because I saw it was recovering. So this one, since the 50-day is falling, of course, I'm not expecting it to just go. It's going to come back and retest. That's why I just put a small profit target over there. And there are other stocks here, but they're not as strong as MicroStrategy. So one other thing is that when you're choosing stocks, you want to choose a hot industry, but also you want to choose the strongest of the strongest. None of these other stocks even is close. That's why I just look at their prices, but I do not pay heed to them. Okay, after that, I go check out all the ETFs. So one really interesting trick is that for ETFs, ideally you want to be looking at both the ETF that's bullish and you want to look at the inverse ETF. The reason is that sometimes it's easier to see a signal on the inverse ETF, which would have been difficult to see on a normal moving ETF. So this is a very good example. So you see here, this bar on 11th is a shorting bar. So here it's time to short the market. Right, so here is a very easy short. Stop is right below there. Risk about 0.4% of the account. Then the maximum profit you'd have got is 6 times, your risk. Of course, I don't think I'm gonna get the whole 6. I might get like only 4, 3, but that's fine. But yeah, I'm trying to show you that here it's a shorting bar. But if I look at the bullish one, 11th December, okay, this one was a clear move too, actually. So yeah, so you can see here, also here, you could have just bought, or you could have shorted this one. So it really doesn't matter, but sometimes I realize it's very easy to see a signal on the inverse ETF, but it's very hard to see it on the normal ETF. All right, so here is definitely a short right now. TNX is a short, but you see here on the normal looking ETF, it doesn't look like it's time to, start a long position, because the 50-day is sloping down. It just looks a little bit ugly on the weekly chart. But if you look at the inverse ETF, it's telling you that, hey man, please short this thing. Anyway, these are just bonds. I keep track of everything. You gotta know where the market is at all times. VIX is recovering, nice. Okay, volatility is going down. Okay, so this one I already bought some today. I'm going to add tomorrow if it crosses above this high. So this is a leveraged ETF of treasuries, right? So that's already my risk and reward level. Since it gapped up, I don't want it to come back and fill this gap. So this is a swing trade. Yeah, it's a very good buy. Maybe the question is, how do we know that this is a swing trade? Well, easy. So we see on the weekly chart, the 30-week is sloping up, right? So it comes and crashes on the 30-week, which is good. So whenever it comes and crashes on the 30-week, I'm expecting it to recover, but the 20-day simple moving average is my signal. As soon as it crosses above that value, then I know it's almost time to buy. And in what manner should it cross over? It should either have a double bottom. So here there's no double bottom. So whenever you don't have a double bottom or a shakeout, what you really want to look for is a chit, right? It's very rare that it will just move like this, So normally you're looking for a chit. This move I'm gonna explain how you can know when to get in. So anyway, so once it comes and crashes, then you want to chit around the 20-day simple moving average. And then what is that chit? You can see it here. So basically you want it to come up, and then, basically you want it to come up and then form like a 3-day, 2-day consolidation around there, and then it jumps above. Then it's time to buy, right? And the confirmation candle is normally the close, that's the first close that's above the 20-day simple moving average. So here we can see that, yeah. So this was the first close. So I bought here, but then it stopped me out, which is fine. And then it has now reset, it has recovered. So now it formed a bigger chit. So this is also what I would call a chit. This quite a consolidation here. So it has done that. And then it has closed over the 20-day, And then I bought because it gapped up in the morning, but Normally you want to wait for it, like this one, which really didn't have a strong gap up. You want the price to go over the high, and then the stop can be, below the low of the candle, and then you can go for a swing trade. But that's a very tight risk. So if you're using such tight risks, you can risk maybe 0.3% of your account. So for this one, if things are to go in my favor, I'm going to get 6 times 0.4% of my account, which is about 2.4% of my account. So just from this very simple trade, and then if I get these 6 wins, that means I can fuck up. No, well, I gotta use good English. That means I can make mistakes on 6 other trades, and then I will not have any issues. So what about this one here, which just went straight up? Another tactic is that if it has 3 days, that 3 green days that that close above the high of each other, that's also a very strong signal. So we have, should we count this one as a green day? I would count this one 1, 2, 3, but it didn't close above the 20 days, so I wouldn't buy it there. So I would buy on this one. So this one would be the ideal entry. Of course, I know you might not buy on that day, you might buy the day before, So ideally this would be, you buy here, low is here. Yeah. And then what about profit targets? I found that it will normally move after a consolidation of about 4 weeks, it will move about 2.5 to 3 times, the risk, and one risk is normally 1.5 average true ranges. So here, I think the value was about 1.8. So normally you can get 1.8, then you can say times 3 or times 2.5. So times 2.5 is the first goal here, times 3 is here. When it goes up here, it's kind of rare, it doesn't happen often. Anyway, times 3 is here. Then if it gapped up on this day and I bought on that day, I wouldn't want it to come back and fill the gap, so I'd probably put my stop here. So I'm gonna get 6. So this is a 6-to-1 trade, Here you can see what I was talking about. Comes up, forms a chit, this is the chit we're talking about, right? And then it jumped up. So that was a nice, profitable trade that you could have gotten. But that's how we're going to be getting all of the stocks that I'm showing you. But anyway, so now we're just looking through the ETFs. I just wanted to be very clear about what I'm looking for. Checkouts, chits, double bottoms on the bases. And I like to see a base which is at least 4 weeks. 3 weeks cannot be trusted unless it's a very strong market. So this is an inverse ETF. So inverse ETFs is just the same. So it is forming a chit, but just in the opposite direction. So here we can see the 30-week is sloping down. It has failed there, comes down from the chit, closes under the 20-day simple moving average. So as soon as it goes below that low, you can short. These are pretty much all the same. I don't know why I have so many ETFs which are just representing the same thing. So I guess that's my mistake. Another one that I like to keep track of is the QQQ. So whenever the inverse ETFs go under the 20-day simple moving average, that normally means the market is about to recover. And this is a signal that you can catch way before a lot of other people see it. So if we go back in time, recovery day here was 13th August and 10th September. So if you go back into the NASDAQ, those were good days to start your new positions, right? 11th September, 13th August. I'll show you. 13th August, you can see here. Market was recovering. Then 11th September, here, market recovered too. So I don't know if it's because I'm pessimistic. I don't think I am. I think I'm an optimist, but for some reason it's easier to see it on the inverse charts. So here, once it goes below this low, I know, okay, the market is starting to recover. It might come back and then check out a little bit and then continue so. But yeah, I don't know the nature of the recovery, so you always keep risk to reward ratios, but it's a very consistent signal that I keep seeing. You can see it here too, crosses under the 20-day, market swings for a long time. you know. Anyway, those are just the economy ones. Then I go into the real ETFs. So I always keep them in pairs, the long and then the short inverse one, if there is an inverse ETF. And then I add them to my watch list if there is one. So this is the FANG. So you see this is signal is easier to see on this one because here it is forming a signal, but on the bullish one it's not forming a bullish signal yet because it's still under the 20-day, but here on the inverse one it's under the 20-day. So that's quite interesting. So the signal is being set here. So yeah, but since I don't like shorting, then I'll just use the inverse ETF to tell me what to do with the long ETF. So I hope I'm not confusing anybody, but yeah, that's just how you do it, my friends. Okay, I gotta remove it from here. Gotta add it back here. Gotta be in order. All right. Nail. I'm staying out of this one. It's not looking so nice. This is a composite and this is RSI. I'll teach you guys how to read those, but you can leave those for now. Cure. Healthcare stocks, I don't like them too much. You see this one had formed a signal quite a while ago, but it just moved. So it's a good long. Put orange here. Put this in this watch list, you know, the swing trades. Get 4 times your risk back very quickly. This one's a little bit, whenever the chart is so disorganized like this, jumping around, I normally just leave it. The best moves are very easy. They don't give you, you know, they're not very confusing. Like this one, it's just all over the place. These ones I just don't touch them. Because you can be shaken out, you know, especially if you have very tight stops. Those ones, those very shaky, you know, volatile stocks are for people who are willing to hold for the long term. So, okay, this is, okay, block. It's a good signal. I don't think I'll buy it, but, you know, because that's a problem too, you know, you get a lot of opportunities, the fact that you just can't buy all of them. That's where it becomes actually quite tricky. You have to just pick the best of the best because you can't buy all of them. This one has been moving up for a while, so nothing new. And by the way, finding these ETFs is actually really helpful because once you know the ETFs, that means you know that sector is moving. And since that sector is moving, that means that you can find the strongest stocks in that sector. So this one is forming a very nice signal here. Of course, this is not a long-term play because look, the 10-week simple moving average is falling. Of course, it's not going to go up. You know, I told you, like, it can't just go up, you know. And the market has not been looking good, so I don't know if it's gonna keep going up. It's gonna be more like this. You see this one recovers and then fails. So you're not looking to hold it for like a long time. You have to wait for this signal. Fails and then recovers. Because it also could come, like it did here, recovers, then forms a bigger crash, right? Which I think is what might happen, but time will tell. Strong signal on the reverse. Okay. Real estate, not a good mover. You just have to find the top ones and then This is a very strong signal. Whenever you see this signal where the relative strength indicator just crossed from red to green and then it tests this point, it's a good time to buy. Just a reminder, you can see it happen here too. Especially if you see it on a weekly chart. Daily chart, you'll see many signals, but unless you're a day trader, they don't help that much. Look at the international markets. This one I'm already holding a position along because, you know, it formed a strong signal here, so I was like, hey, time to buy. That signal had not appeared in a while. The last time it appeared was here, and we saw what happened. From the time the signal appeared, it went up 48%, right? And your risk on this particular time, like I said, you wait for it to recover. Best time to buy would have been here. No, where was the signal? Okay, yeah. So of course it was gonna come. Here it didn't go above the high of the confirmation candle, right? So you're not gonna be stopped at. So let's say you came and bought here on the recovery the day after. So you could have had 5% risk, maximum profit is 44%. Let's say you're late, you bought the day after, 7% risk for 35, so 1 to 5. Then the ultimate last time when it was still a good time was here when it gapped up. So I don't want it to fill the gap, so I'll take that 5% risk, 21. Just the inverse of that one. Argentina market, I always keep an eye on all the markets, like I said. China had some really good swing trades here, but I was literally watching that market, but I caught the wrong stocks, so that was not a nice feeling. I still have to do some studies on why I did catch the wrong stocks. But India has been moving, as you can see, guys, but since it didn't form, you know, a very good signal, then I didn't get in. I don't trust the move yet. Confirmation is key. Korea kind of had a strong signal here, but of course I didn't buy because I just don't know that market so well, so I don't know how it moves. Gold has been killing it, guys, but it's too late now. Good time to buy was here and here. Silver, I took a couple of positions, but it has refused to break out to all-time highs. It might be forming a temporary chip, hopefully, but we'll see. It's not been acting nice. Natural gas, this has been a very big play for me this year, so I'm still holding on. I'm waiting for it to bounce off the 50, continue. Of course, I don't buy the natural gas itself, I buy oil. I think I bought oil around here, $59. Went up for 80%, but now it's back. I sold some here on the return, so I'm waiting to add if it recovers. If it closes under the 50, I'm out. You know, this is the process. So the reason why we are looking at all the ETFs first is, you know, trying to get a sense of the market first. You know, get everything, which sectors are moving, which ones. Because then after that, we're going to go into which particular stocks to swing trade next. If you're a long-term investor and you like to hold for like maybe 6 months, then you don't have to do this every day. This is more like for swing traders. Okay, now I'm going into stock details. So here I have an industry chart, stock chart, daily chart on this side. Industry chart, stock chart, daily chart. These are composite and stock RSI for that particular stock. So I start out with basic materials. Which one is showing the strongest signal? Because my computer is normally wider, but since I'm streaming, I can't have a very wide screen, so now it's not the same anymore. But anyway, We shall live with what we have. Okay. So funny, I've never seen the screen this small. See, financials have recovered over the 20-day. Now I just gotta find the strongest stocks there. Root, this one I already bought it on an earnings play. It's been up. I think I'm up like 60%. Okay, so is this a good base? It's a little bit tricky. It doesn't have a double bottom, right? So it's 4 weeks, great. You know, it's kind of forming, it's kind of testing here, 3 lows. It formed a cheat here, but the cheat is so far away from the 20-day simple moving average. You want a cheat right above or on. So this one is okay. You know, I'm gonna move my chart this side, you know, just to keep my, it's where so I keep a list of like a watch list over there. Keep it on the side, you're not gonna be able to see it, but just know whichever stock I'm gonna be saying yes to, it's gonna be going into the watch list on this other side. I'll show you that later. Anyway, this one I'll just put it just to watch it, but I don't think I'll trade this thing. The only good thing is that the 50-day simple moving average is rising up, but this straight falls are not, they're normally not trustworthy. Okay, this one I already bought because it gapped up on the day, so, and I'm just going for a swing trade up, because you see, whenever you see the relative strength indicator, the fast moving average is crossing under the slow. So what normally happens is it's going to come, test, and then crash. That's why I don't expect this price to just go up this side. I'm expecting it to come, you know, maybe just come around here and then continue to fall. Or it could form a chip, I'm not sure. But at least it's not likely to go up in a straight line. Keyword is likely, because you never know. Anyway, lemonade, it's too complex. See, this one is forming some tight price action here. I actually bought. It's a very bearish sign on the RSI, you know, on the composite. So it's more like a swing trade. This was a risky one, so I wouldn't say anyone should buy it. Sometimes I carry out experiments. This one was a good one from the chit here, very small chit. Gapped up on the day. I did not buy it. I should have. You know. But like I said, you have limited positions as well. You just can't be buying everything. And also, you don't need to get everything. You just need to be getting the top ones. So I do organize the stocks according to their relative strength. So the higher the value, the stronger it is. So the lower I am on the list, you know, the less likely I should, you know, I shouldn't be buying stocks. And if this number falls below 20, I'm not getting it. So I scroll through the stocks. Like I told you, looking for a chit, a double bottom, check out. Straight fall down, likely to recover for a little bit. You know, still not to be trusted. Because people underestimate how much money you can make by literally not being in the market. That's the funny part. Because I remember some year, I don't know which year it was, but I think I was down like 5% the whole year. I was like, man, what's happening? 8 months, no results to show. Then in the last 2 months, my account went up 50%. That's because the market recovered and had a very strong rally. So these things happen a lot. You always gotta keep your eye out. That's a problem. If you blink or you sleep in, you miss those big days. Okay, financials done. Utilities, these are also rated in terms of their strength. So utilities are the second strongest now. VST kind of transform this shit. So you see, I think it's gonna come and then it's just going to continue collapsing. This stock does not look good because this is definitely a head and shoulders pattern. Shoulder, head, shoulder, collapse, come back, test this value, so it might reach here around 170 and then fall again. But then that will be a very nice shot, so if that does happen. The problem is that prices in our minds move way faster than they do in real life. So a lot of people actually lose money because they're thinking way ahead of things. And by saying a lot of people, I mean I used to do it myself. So here, energy. This one I missed it. So this industry had recovered here. I should have swung. I should have gotten in here. Took this 4%. That have been up to risks now, but because you see here, kind of like a quick checkout. That was nice. You see a small chit here, nice as well. Here you wouldn't have entered. Why? Because the price did not go above the high, and the candle didn't even close over the 20. But here anyway, you shouldn't have entered. Here, nice, goes above, you know, the chit. So you can either buy in this candle, and then as soon as it moves above the high, so it's nice. Stop should be around here. Tight risk. Because one interesting thing is that very good moves never come back. That's one thing which I learned late. The moves which are very good to you and which are gonna make you money, they don't dither around. They normally just go, right? They're not going to confuse you a little bit. You don't get confused. Whenever you're confused, it means it's not it. Or maybe you just don't know the signal, but most times it's just not it. That's one simple rule I live by. If I'm confused, I should probably not be in the stock. Okay, here, since it's getting very weak, I'm getting into the 20s. I'm like, oh, this one I missed it, but also did not have a very good signal. So this one is like, looks like a checkout, but since it was so many weeks from here, because the farther out the signal, the weaker it is. So I didn't really trust it, and I just didn't buy. Here, see, zigzag. I wouldn't say it's a checkout. It is a checkout, but it's too deep. But anyway, it comes from this little chit here. Goes up 6%. Risk would have been 3.5. Okay, consumer cyclical. Okay, now here we get to the good stuff. Cyclicals and okay, so this one I already bought some today, but it's gonna be more of a swing trade, because sometimes when you see the relative strength, averages above 60, it's a very strong stock. You want to be in that stock always. And also for each industry, you don't want to be in more than 2 stocks, because if that industry turns over, you're gonna be in big trouble. Bros, nice signal too, but I already have these. LTH, I missed out on this. TPR, pretty nice. It cannot be trusted. But it looks like it could be a swing trade. Adding it to my list. Havana, nice. See the checkout, then goes here. Come on, guys, you know what that is. Buy, but I kind of missed. I should have bought some today morning when it gapped. But also it doesn't look too nice in the bigger picture of things. The only nice thing is that we see a divergence here. Price going down, relative strength indicator is flat, but relative composite is showing a divergence, so that's a good sign. Also, the higher the stock price, the better. If the thing is above $75, it's always a good choice. But remember, like I said, all of these are swing trades. I don't think this market is, excuse me, for long-term trades, or like, should I say, holding on. I would not trust it yet. I would not trust it yet. Okay. What are we seeing here, guys? It's a little bit of a chit. It's a little bit hard to tell, but after a few years of practice, you will tell what is a chit and what is not. But yeah, this congestion here, and then it jumps up on that. That's a very good signal. And it's jumping off the 30-week moving average, right? So did here, moved up 80%. Here, is it gonna move up 80? We don't know, but we're just supposed to watch and learn. Okay, so here, when it jumped up to 31 was the best time to go in for a long-term trade. I'll just zoom out for you, you can see. So you see it came, and then it formed this kind of chit here. So here was the best time to get in, right? 166, and then you could have gotten 60% gain. But what was your risk? Just a 4% risk for 60% maximum gain. I don't think you're gonna get a 60% gain. You know, I would have bought here, I'd have sold here as it crosses another 20 days. So 50% gain for 4% risk. So about 1 to 10. Very good risk to reward ratio. That's why I'm saying you don't need to rush it here. This is just me being impatient. And you have to remember I have two accounts, one for swing trading, one for the longer term moves. This one left us. Melee is good, but doesn't look so good, right? Because you see here, this is looking like it's gonna be a zigzag, you know, an Elliott wave move. So I'll explain to you later what is. Cake restaurants. So you see restaurants are very strong right now. So that's a very good signal. Get some restaurant stocks and leisure stocks. And this gives you a good, so within consumer cyclical, I can look at the specific industries. So media, these are also sorted according to strength. So media companies, which is the strongest media companies, so them according to strength. Netflix is here. Broadcasting, luxury goods, I wouldn't get this. Special retail, probably leave this alone as well. Leisure are always very good. You know, look at the top leisure stocks. AS is good. RCL is very good. I love it. It always creates some profits. These higher priced stocks are safer because, you know, they don't confuse you too much. That's why whenever a stock is above $70, it's nice. It's smooth, you know. It's not very crazy moving. Restaurants, like we already talked about. So you see all of these restaurant companies. You don't want to be picking some down here. You want to be on this top two, you know, the strongest ones in the groups. And also you can see if it's a super growth stock. So of these two, of course, it is the best. It has a stronger relative strength and it has better earnings than Bros. So, you know, since you can only pick two in a sector, these are your two. Real estate, I normally just, I don't pay too much attention to this. Industrials, oof, this can be sweet if you catch them well. Oh boy, what do we see? Do you see what I see? I'm sure you do. CAMS, corrected to the 30-week, has formed a very nice chit here. This is a chit. Add it to our list. This is how you find the stocks to swing trade, you know. Now there are some people who are piling on positions here, and this is not a bad time to add for a long-term play, you know. Could probably risk, what? This stock is a mover, so you could probably risk like 4%, you know, goes up 80%. So let's say you got it here, you know, when it was recovering. You'd have risked about, yeah, 10%. It went up 400%. So it's a very good stock. SCHR, I bought this one. I think I'm just gonna move into RKL because this in aerospace is looking good. But as I said, these are swing trades. I don't think I would hold these on because they're very bearish. But this is why you can start building positions, you know. Market is not looking so good. That's why I don't want to hold for a very long time. But I would expect it to recover till here. And then you can make like 30% profit with a 5% risk. So pretty good. ACHR, you see, falls. Kind of looks like a checkout. There's a cheat here too. You know what that is. It's a buy. Okay, CRS. It's pretty good, but it's just all over the place. So I'll probably just leave this one out. Accept that loss. AGX. Crash, cheat. Nice. Alright. Rising 30-week moving average. That's also nice, but falling 10-week or 50-day moving average. So, you know, it's not likely to just shoot up. I didn't trust this one yet because this industry is not as strong as, you see, aerospace is up here. AGX is in engineering and construction. I don't even know why it is. Oof, it's down here, so it's probably better to first hold a defense stock. So this is what the analysis does. Axon, it's in the aerospace and defense, but I wouldn't buy it because there are other better stocks in there. The only good thing about it is that it is a high-priced stock. So, and also it's not, none of them are ready for a long-term play. These are all just swing trades, my friends. Okay. This is what it takes. Airlines. Is there any? A good one? No, everything is above, is below 20. I'm looking at this number, should be above 20. I bought this one. GE. I wanted to buy this one, but the stock was just confusing me the whole time. And it didn't look good here, so I kind of just left it alone. So I was like, let me find something worthy of my time. Anyway, we're looking for a good industry, and then if the industry is good, we can find strong stocks within that industry. Very clear signals too. We don't want confusing signals. Engineering and construction, you see, is recovering over the 20, so that's nice. Try to find the strongest stocks in here. It's definitely just AGX. The others are not looking good. Anyway, technology, my favorite. Come on, let's go. So you see so many strong sectors. Start out with the stocks. This one's a very good one. This one is more of a long-term play because you see the base is very long, but the market is not ready for a big move, you know. Because here, if I look at my studies too, whenever these big moves are happening, the market must be in a bullish state. See, this move started when the market was recovering. This is the market chart. Goes for a 500% move. But look, every time it resets, the market is recovering from a thing. And here, the market actually is recovering. That's why I picked some of this up for kind of a longer term play. But the bigger trend of the market is not looking good. That's why I'm not expecting this to go anywhere. But if I'm lucky, then it will work out. Of course, this one, we cannot touch it, man. 2.2 market cap. I don't know how it ended up in this scan. Inode looking okay, but I'm not seeing that shit, you know. It's too low. The chit should be very, you know, shouldn't be going down, it must be flat. Up, of course I already bought, gapped up in the morning. PRCH, stock is struggling to go up. That's not a good sign. Palantir, I hesitated, I did not pull the trigger on this one. And I think it is just out of the buy zone. This one should have been a buy at the beginning of today, so I'll add it to the watch list just to be looked at, but not to be touched as a trade. Two different things. Sometimes I look at the stocks just to keep studying them in my head, being like, oh, what did I do wrong? Dave, see this very nice chit? Gaps up, nice. But remember, bigger trend of the market is not looking good, so we're not expecting it to be going, you know, overboard. I mean, the market can recover in a straight line, and that would be nice, but that's rarely the case. This one, it's not so good because it's just a straight line down. So, I mean, you could trade it, but it's not the best option, you know. Look at all the straight lines down. Kind of did this for a little bit. Stocks don't just fall like this. You know, they have to, it has to form something like a zigzag. This one, I already bought. But this is a Bitcoin stock. It keeps showing up in tech stocks. Spotify. The base structure is very bad. It's just a straight line down. I didn't touch this thing. CLS kind of looks like a checkout here. Could it be a buy? Yeah, maybe. But like swing trade, this is not, and these are not buys for like a long run. That's why I don't even like this video too much, because right now we are not seeing any really good setups. Twilio, not bad. DoorDash, the base doesn't have a good structure. Just looks like it's just straight down. You want something that, you know, forms like a zigzag. Like this is a zigzag here, you know. See this zigzag? It's a little bit of a zigzag. At least that you can trust. That's a, you know. But the best is when you see like a cup and a handle, double bottom. Those are the best. These ones that are, this is a very clear zigzag. All right, so this is wonderful. DocuSign. But you see the stock, it has a good technical pattern, but it's too weak. There are other better stocks, and you also have limited money in your account. So why would you pick these really bad, low-performing stocks? Yet there are hotter boys out there, you know. That's one interesting lesson. The stock market is just, it teaches you some weird skills, because it's like the losers just keep losing, the winners just keep winning. You know, I guess when you come here and you're a little bit empathetic, you're like, oh, maybe this stock, which, you know, was losing this whole time, it's going to recover, but that just never happens, my friends. It's pretty looking good, not too bad, but of course I wouldn't touch it. Why? There are other better stocks. I just keep looking. Maybe there's some good company in here. See, this is the checkout. Of course, I wouldn't touch it. There are other better companies in the same thing. Go look at software application. there's Appfolio, there's Dave, there's MicroStrategy, and you're touching these ones. Come on, man, you have to be a madman to do that. Even madmen would not do that. They would laugh at you. Okay, utilities. Did I go through that? I think I did. Yeah. Which one did I not go through? Consumer defensive. Wow, my favorite stock is not showing up here, which I'm already holding. HIMS. Something is holding my boy back. See this straight fall down? I don't like it. But you see here, this base had a straight fall down. I didn't trust it, but then it had a chit. So now it jumps over that chit. It surprised me with this move. You know, risk could have been, if you bought here, risk could have been below the low. 6.8, 20%, 1 to 3. But of course, the best would have been here. Chit is kind of below this candle, I'd say. 3.5% for a 25% gain. I don't even know what that is, but definitely sounds like maybe 7 to 1. Maximum, of course, you might get about 5 out of that 7. Let me see why HIMS, what is it HIMS failing? Because this one, I'm definitely, because you see, since it's a straight line down, what I'm thinking is, since I'm already kind of holding the position, I'm just going to swing it till here. I don't think it's just going to recover. It's going to come and fail again. But I would say it's a good swing. My risk is going to be 9 to make about 30. So 1 to 3. And I'm already holding it. I bought it here. Sold some here. Well, most of it here. And this was also a bad exit. I should have just sold here. But man, can you imagine? I had this 129% gain and gave it all back. Now I just have a 30% gain. That's what happens when you don't sell. So selling is actually more important than buying, because if you know how to sell, the world is your oyster. If you don't know how to sell, you're going to be hating yourself for your whole life. Okay. I'm not saying anything else here. That's a little bit nice. Energy, we finished that. Consumer defensive. So since consumer defensive, I finished basic materials. How are these? This really the strongest? Man, this list is kind of confusing, man. I'm like, what's going on? It keeps changing. Healthcare, okay. I don't touch the stocks a lot. That's why I just don't go through them that much. Cure, especially biotech stocks. I'm like, you know what? You guys can take your money away. It is punishing money. It's just very hard to just these stocks. Unless it's a very high priced stock. But biotech stocks, they cannot be trusted. See, all of the stocks in here are weak. So the stronger companies are up there in those stronger sectors. You want to stay in the strong sectors. These weak sectors, you just look through them, maybe just for visual practice, but do not waste your money. Okay, last one, consumer defensive. No, basic materials. Yeah. So we got to look for the strongest companies, and gold is the first one. But you see, gold is not, all of them are kind of overextended now. I already bought a gold stock. Where is it? AEM. Yeah, I already bought this one. Silver, I also got EXK. It's not here, but this one's also, they're not ready to buy right now, I would say. Oof, this one's looking good. Mag, did I buy this one? Look at this chit, 9%. It's a good chit. Let me just add it. But I already have a stronger silver stock. Because you see, even within silver stocks, you want to be picking the strongest silver stock. So it's always this game of finding the strongest boy among all the boys. Still not looking good. Look at the moving averages. It's not a setup. This one it's more like I'm waiting for a shot, but I don't trust it yet. Clear signals are the best. This one, no, copper. Copper looks like it might be up to something. That's the truth. But it needs like 2 months to set up really tight. So these are all looking bad. Okay. After this, I look at my high tide flags. I'll show you here just the very strongest stocks in the market. Just to see which ones. Root I'm already holding. KC, this was a good buy here. Risk 8%, maximum profit 91, 1 to 10. Here, good buy. Risk about 7%, maximum profit is about, let me just say here, 300%. So when you catch those, your life can feel really nice. STS, it's too, you see how it's too all over the place? The moves have to be very clean and easy. Those are not easy moves. That's why I set it profit punch, so that I can just at least guide people. Okay, sale girl. So I'm looking okay. These are IPOs, by the way. I just looked through them. This is good. I won't lie. This is good. But it's more of a swing trade. I wouldn't get it right now. Actually, I would, but I just don't want, because it has always stopped me out, and I've lost the will to fight for it. Rubric. See this chit? It has come from the chit. It's nice. Is it gonna do something nice? I am not sure. Continue with my IPOs. JF, solve, edit. So you see, it's a very good lesson. This one looked like it was going up. This is why it's better to stay out of stocks in the bird market. Because now, if you look, the market was crashing down here, but solve kept going up, and I was very tempted to buy, but I remembered in a bird market, even those that look like they're going up, they normally just play with you for a little bit, and then they just come down just with the rest of everybody. So it's always better to stay out. Just sit and wait. Straight line down, but it has a kind of a chit here, so, but also it's too late. Is it? I would say it is. Have been bought at the beginning of the day during the gap up move. Latecomers eat bones, as they say. MicroStrategy stock. These guys are crazy. Biggest Ponzi scheme on earth. When Bitcoin comes crumbling down, I don't know what those guys are gonna do, but It will be nice to watch. Anyway, after getting all of that work in, then we come back and now we've collected a whole list of stocks and ETFs, and then from here you have to choose like 2 or 3 that you're gonna put in your account. Well, it's an interesting fit, but yeah, I guess it's not for everybody, but at least you can tell what the process is like. So this one is good, strong stock. See that failed trade over there? I thought it was going to break out, but didn't. Oh no, these are in industrial. I bet. Palantir, too late. Dave, I would still buy this one actually. Didn't move. Stop would be very tight. Stop would be here, 6%. I think it's gonna move about 25% from here. So I'd expect it to go to like 115. So my actual entry would be around here. It's maybe 6% risk. No, actually my stop, if it goes above the highway candle, would just be below the low. So my stop is gonna be about 5%, 4, 8, 20%. So 1 to 4. So yeah, then I start putting red on the good ones, which I would buy. Dave is the best, because you see when the moving averages, RSI above 60, CLS is good. Docu has a very nice technical pattern, not gonna lie. It's very nice. But it's too weak compared to the others. It's just too weak. But you see it is forming this big base and it looks like it wants to recover to all-time highs. Are these guys cooking up something? Look at the earnings. Not bad. Not bad, but not that great either. Anyway, RKLB to replace my CHR, definitely. AGX has earnings soon. Okay, I just gotta leave this one out. You don't want to be in during earnings. Go up, could go down. Jeff, too late. This one is just here, just for watching purposes. LTH, I already missed it. Opfi and Sophia, financial stocks. After some time, you get to know which one is which. This one, it's so tempting because the stock is so strong, but it just doesn't have the right technical pattern. It just doesn't have it. I just don't like it. That's just the problem. It must have the right technical pattern. Sophie had a nice gap up. This one I don't think I'm gonna really get in. I already have Hood, which is a financial stock. TPR, it's pretty good actually. Like I told you, the all swing trades, the market is not looking good. But you see this one is bouncing off the 60 level, very strong. You know, you just get 2.5% of this, 2.5 times this, so 12 plus 3, 15%. 3% risk. This is pretty good. Risk to reward ratio. Kavana, Homeboy. I think this one would be good. Just for a swing trade, of course. But of course, the best time to buy it was here, the open. Risk is 4%. Oof, probably looks like a 25% move. This one, ready to. All right, and basic materials. Now we didn't go through those. China. This one has been checking me out so bad. Oh my god. Just okay, but I'm waiting for it. Argentina stocks. I already have SUPV. So stop. See this confirmation candle. Stop is below that can. I'm expecting it to go here. I didn't pick up more because the other stocks in Argentina, they're not looking so strong. You know, they're kind of dithering around. That's why it's like, don't trust it. ETFs. This one is not so good because this one definitely tomorrow. If it goes above the high, goodbye. This one was a signal a while back, but not anymore. I'm gonna remove it. ERX, signal a while back. Argentina, this is just for what is just for watching. Ciao. No. Oops. TMV. Okay, this is definitely just a swing trade, I would say. But falling like this is not a good sign. That's what I'll tell you, my friends. And also the chit is very far away from the 20-day. Has it done that in the past? You can see a good chit is just around the 20-day. Not so below. Not so below. So this one, maybe it's like this. Could do this. And I don't think it's gonna do this. But anyway, let's wait and see. Fast. I'm gonna recommend the good ones to the people in the newsletter, but yeah, I just wanted to share this and show you how to, yeah, scan through the whole stock market. I hope you learned something. May the markets be with you. Thanks.